I welcome you all into the series of Prelims through PYQs. In this series, you all have been continuously aspiring for the Prelims 2025. Now, as you have been continuing the series and have been consistent in attending these lectures, I want to congratulate you for your consistency. Now, the point here is, what we will be going to discuss in today's lecture is national income and the questions which somehow are related to the concept of national income. But we all know that UPSC, whenever it asks question, every question in prelims is basically originated from the basic concept and the basic conceptual clarity. Once you have that understanding of basics, the Vedas of UPSC or NCRTs, once you master them, then only you will be able to understand that what are the complexities in every question. Suppose if I start the today's session, you will see that in national income, what we have, the first question which talks about the capital output ratio, or this question per se asks us that despite a high saving economy, capital formation may not result in significant increase in the output. So there are two terms, that is, one is capital formation and another is output of an economy. Now understand it. UPSC in its past PYQs, today what we are considering is 2013 till 2024. These PYQs will be considered in this series. But remember one more thing, that we have to infer knowledge that how UPSC questions are formed. Such question on incremental capital output ratio was asked earlier also, before 2013. So therefore UPSC has repeatedly asked questions which are theme based, and these themes are there. And today we are discussing the national income theme. In national income, there is a concept of capital and output ratio. So capital and output ratio basically talks about a concept where we know that in an economy, if there are few number of industries producing a simple amount of or a simple quantity of goods, now if this economy is established and is producing its GDP, for example, if I say that in our India total we have only one factory which is producing a GDP of only 100 rupees, then how much should we invest more? A person who is operating this industry, who is operating this business, how much should he invest more to produce one more unit of output? If he is producing these pens, 100 pens in a year, how much investment is required to produce one more unit in a year? Or for that matter, in economic terms, what we should learn is that how much investment should be there to increase GDP. If I say that in an economy there is an increase of, or there is an investment of 32%, there is an investment rate of 32%, and I guess this is not working, there is an investment rate of 32%, fine, and the GDP is increasing at a rate of 8%. How much is our capital output ratio, which means that how much investment are we doing and how much growth are we achieving by this investment? That is 32 divided by 8, which is 4. So our incremental capital output ratio would be 4. That is the capital output ratio. Therefore, in this question, if you see, the first term asks that high saving economy is there. But remember, why do I discuss these questions in such a detail is just to make sure that your basics are strong. Once you master these concepts, you will be able to solve any sort of question which comes in 2025 paper. I want to build your basics, then only you can solve the questions. Otherwise, just mugging up the things will not cater to anything at all in prelims. Now understand, once UPSC asked a question on incremental capital output ratio. Now, later on in 2018, this is a 2018 question, and in 2018 UPSC asked the same question but in a different language. That is, it placed high savings, capital and output in one single statement, and then only it formed this statement that if the savings are high, it means if the savings are high, investment will increase. Remember, if the savings are high, investment will increase, and once the investment increases, it means that capital formation will also increase. But remember, if the capital formation is increasing, capital is more present in the economy, but still the output is not increasing, it means that we need more capital to increase one single unit. What is it? It is capital output ratio. That is, the high capital output ratio in an economy leads to less growth or less output because of this concept. Done? Question number 1. Now, question number 2. Again, very tricky question. Otherwise, seems very simple. बहुत ही आसान सा question लगता है, 4 लाइन का question है. But remember, always there is a trick in UPSC questions. Not the trick to solve. Anyone on any platform tells you that you need to master some tricks to solve UPSC is fooling you at all. You need to master only and only one thing, that is your basics and your conceptual clarity. Nothing other than that. Make your basics strong, you will be able to solve. Don't fool yourself with tricks and or tips. Now understand, if a commodity is provided free to public by government, a commodity is provided free to public, fine. Something which is provided freely to you, what will happen? The opportunity cost of this commodity will be 0. Opportunity cost is ignored. It is transferred from consumers of the product to tax-paying public. The opportunity cost is transferred from the consumers of the product to the government. First of all, the question is not this. The question is opportunity cost. What is the actual definition of opportunity cost? If you understand, well and good. If you do not understand, you can still derive the answer, but not with tricks, but with proper understanding. How? Remember, if a commodity is provided free to public, it means it is provided freely. Free means the cost of this commodity is not paid. By whom? By public. Otherwise, this cost would have been paid. Now someone is paying this cost. Who is paying this cost? The cost is being paid by the tax-paying public. How? Because this cost is being incurred by whom? By government. Government is paying for this commodity which is being provided free to public. So government is paying out of what? Out of its expenditure, out of its exchequer. How and from where does government get that revenue? It is getting that revenue from tax-paying public. So taxpayers give the money to government. Government pays for the money. Government pays the money to the commodity, and this commodity is provided free to public. Therefore, the opportunity cost is transferred to the tax-paying public, not anyone else. Now, 2 questions we discussed, but you might be thinking that they are not related to national income. National income, conventionally, we have discussed GDP, GNP, or the concepts like that, basic price, factor cost. These are the usually taught about things in national income. But if you do not know the basics, how will you know GDP or NNP or GDP at market price, GDP at factor cost, GDP deflator? What are the terms in national income? How will you understand them if you do not understand the basics? These 2 questions are very basic questions. Then only you will be able to understand that how to interlink this question. If anyone remembers the first chapter of NCERTs, which talks about the circular flow of money, he will be easily able to get the question. He will be easily able to solve the question. Why? Because the question is not also, as I said, this is not the question. This is the question, that is opportunity cost. But again, opportunity cost is not the question. The question is circular flow of money. If you understand the circular flow of money, you will be able to understand that how this question was framed, how the concept of opportunity cost comes in play. Understood? Chalo. Next. Next is now coming to national income. What are the aggregates of national income and how do we calculate national income? Why should we calculate national income? These are the questions which you might be at this moment of time while you are watching my video, you might be encountering in your mind. These questions might be popping up in your mind, but calm down and be in this lecture for next half an hour, and you will see that everything will be lucidly explained to you. Understand what are the aggregates of national income? These are all the terms which are related to the determination of national income, that how do we determine the income of a country, the income of a nation. Why should we determine income of a nation? Because if you do not know how much is your income, how much is your family income, then how will you manage your expenses? Then how will you manage your expenditure, savings, and then think about your investments, and further plan your retirements, pensions, insurance, healthcare. Everything is planned according to the income of a person, income of a country. Now, once we calculate the income of a nation, then only we will be able to allocate the resources properly in a proper fashion. Now, if you want to allocate resources and understand that macroeconomics is resource utilization, maximum utilization of resources and efficient utilization of resources. This is the particular definition of macroeconomics which was given by John Maynard Keynes. And understand that these aggregates of national income help us in determining national income at different stages. Why? And why why all of these aggregates are there? 1, 2, 3, 4, 5, 6, 7, 8, 9 or 8 aggregates are there. There are multiple other concepts of national income, base year income, other hundreds of concepts are there in economics. But before we go into that, let's just understand why these much of concepts and why not a simple calculation of A to Z, that there are 100 industries in India, 100 industries are producing 100 units of goods, and then we calculate the cost of it and we get GDP. Very simple concept which we can comprehend easily. But the economy is not that much simple. We have people working outside, people from foreign working in India, embassies working in India, sending their revenues outside India. Then we have our industries working in the territorial areas, working in the territorial seas, working in the domestic area, working in the foreign lands. We have a plethora of relations or economic relations in trade, import, export and whatnot. That is why that we need to cater that what are the effects of indirect taxes, factor cost, what is the farm gate or you can say the industry gate price or factor cost, then again what is the market price, how inflation is actually being calculated in determining these prices, how is the effect of subsidies and indirect taxes in calculating the prices in the market. Once we calculate the prices of the market, then we need to sum it all up with different methods like the expenditure method, like the production method and the income method. Then only we will be able to understand that how can we determine a figure which is consensus based and acceptable at national level. Further, one more thing is there, that according to the recent estimates, there are differences among the three methods. The figures of the three methods do vary, but that does not mean that the three methods are wrong. But the point is that different parameters are used and different dates are used and different calculations are used in these three methods, which we will be going through in the upcoming slides. Now, let's begin with the national income aggregates. First, what is national income? We need to remember these keywords and then understand the meaning of these keywords. Once we understand this, then we will be able to solve more questions. Monetary value. What is monetary value defined over here? This is basically the market price. Understood? That is the actual market price or the factor cost. That is the cost of factors. That how a product, if I say this pen was produced in economy, what is its market value? What is the market value of this pen? How can we determine this? We will see how much has been its factor cost. What was the cost in producing this pen? This, you can see this refill, you can see this ink, the plastic body, the shape, the designing, everything will be calculated, and then we will see how much indirect taxes have been applied on this and what is this the product in which government is giving subsidies. then we will calculate all of this and then we can determine the market price of this product. That is the monetary value, the market price of all final goods and services. Why final goods? Why not intermediary goods? Because if the ink and the pen are calculated 2 times, it will lead to duplicacy or redundancy in our data. That is why we calculate only the final products. That is, the pen will be calculated in national income, not the ink. But per se, if the ink is the final product and it's not going into any pen, it is being sold in the market as ink only, then that ink will be also calculated. Now, all the final goods and services which are produced by normal residents of country. Who are normal residents of country? These are the people who are ordinarily residing in a country for 1 or more years. If they are residing in our country for 1 or more years, these definitions are very much important. Second, all those people whose center of economic interest lies in our country. That is, whether they are Indians or not, but still their corporate offices are here, their business is located here, or their business is located somewhere else, but majority of the decisions of that business are taken on the land of India. Those are normal residents. Now, why do we calculate this and why do we consider these normal residents? If you go deeper into this concept of normal residents, you will be able to understand that what is the concept behind shell companies. That decisions are being taken on our land, but they are located somewhere else and they are taxed over there. But for the matter of production, it is here. Now, these are normal residents. Again, normal residents, whatever the final goods and services they are producing in one accounting year. Remember, it's accounting year, not a normal calendar year. That gives us national income. Now, all of this is calculated to national income. Now, understand one more thing. National income is equal to net national product at factor cost. Now, what is net national product at factor cost? This thing we will be dealing in next slide so that it will be easy for you to understand. What is net? How to calculate net? How to calculate national product? And how to calculate factor cost. These 3 terms will be discussed in next slide. Next, there is the concept of GDP. You might have heard a lot about GDP. This increase, decrease, these much of figures in our national economy. The concept was given by Simon Kuznets in 1934, the modern GDP. Further, we discussed normal residents. Who are the institutions which are dealing with the calculation of national income? We have NSO and Ministry of Statistics and Program Implementation. As in 2015, we started with the system a new series of national income accounting as per the standards of the system of national accounting 2008. This leads to the double accounting, or you can say accounting both income and expenditure and accounting both the you can say heads. The double accounting, we don't need to go into that, in which we debit and credit at the same time, and we understand that where from the revenue came or where from the cash was took and what was the debit and credit effect of the transaction. That is double income accounting. That is something which is under the SNA 2008, not to be done here, but yes, remember the keywords what we are going through. Understanding the factors of production. Why to understand factors of production? Because I already told you that national income is net national product at factor cost. So what is factor cost, or what are the factors of production? How do we define factor cost? Factor cost is the cost. Kharcha kis cheez ka? The cost of factors. What are the cost of factors? All the factors which were in play while we were producing this pen. What was there in play? One was land or capital. How much capital have we invested, or the land or the building in which we are renting, or which we have purchased, or which we have invested in to produce this pen, to establish a plant, to establish a factory to produce this pen. Second, labor. All the salaried employees, whether they are formal or informal, whether they are in organized sector or unorganized sector, all the labor, the salaries, the wages, the rent, the wages which we are giving to our employees who are adding value into this product, who are making this product happening, or who are making this product with the final touch, all the production line employees or the decision makers or the designers or the ones who have planned the marketing strategies of this pen, everyone is being paid wages, and that comes under labor, and all the cost of that adds up to the factor cost of this pen. Last, capital. How much capital have you invested and what is the profit of that capital? Entrepreneurship, that anyone who is planting or who is establishing the firms, who is establishing the business, how much entrepreneurial skills has he invested into it? What kind of entrepreneurial developments are there? Has he taken a lot of risk or has he invested a lot of it? These are the factors of production. Done. These factors of production, once they are calculated, they give us the factor cost. This factor cost can be derived, or this factor cost is the cost at the gates of an industry or the gates of a firm, that a product was made or it was manufactured and it reached the gate of the industry. But once it leaves the gate of the industry and it enters the market, there the price of this product will change. How will it change? This price will now be called as market price. Why? Because this product will face two more things. One is net indirect taxes. Fine. It will face indirect taxes. Second, that is subsidies. One, it will face taxes, and another it will face subsidies. Subsidy for that price. If the product was of 100 rupees and government wants everyone to purchase it at a lower price, government will pay 50 rupees subsidy to the industrialist and he will sell it in the market at just 50 rupees. The taxes on this product, if this product attracts any kind of GST, indirect tax, then the tax will be calculated at that point of time, and this will define the market price of this product. Done. Next, market price of a product is factor cost, production tax and production subsidy. There are two more elements in the factor cost in the market price. One is production tax and another is production subsidy. Remember the two terms, production tax and production subsidy. Already asked, I guess, a long back question. बहुत पुराना क्वेश्चन है ये, जब ये पूछा गया था. प्रोडक्शन टैक्स एंड प्रोडक्शन कॉस्ट, प्रोडक्शन टैक्स एंड प्रोडक्शन सब्सिडी, these are two types of concepts. One is this production tax or subsidy applies to those industries, remember, to those industries just for establishing that industry, not per unit product. Simple. If an industry is producing these pens, if it produces 10, the tax will apply to the 10 products. If it produces 100, it will apply to the 100 products. That is product tax. That every product is being taxed as per the production. But production tax as per the number of products manufactured by the industry. Now production tax is just because the industry or the nature of that industry attracts that amount of tax or attracts that amount of subsidy. For example, the alcohol industry attracts a production tax. Why? Because establishing that industry may in itself damage the environment and the public health. Therefore, establishing such industries will attract the tax, the production tax. Further, production subsidy like the fertilizer industry. If it is the urea fertilizer industry and or it is the storage capacity of agricultural produce. It is to develop the horticulture sector. We are developing what? We are developing storage capacities. We are developing food processing industries. That industry will attract food, that will be incentivized by food or this production subsidy. Done? That is production subsidy. You need to remember base price. Also, base price is basically about the product tax and subsidy, and base price is about the market price minus product tax and product subsidy. Do not confuse it with the base price or the constant price. Okay? Now, base year is again the year at which you define that how much was the tax at that year, which is some you can say 10 or 20 years back, so that you compare the taxes of the base year and present year. One more concept of base year is when we calculate what? The prices and the inflationary effect in the market. That is constant price and current price. That base year, why do we keep that? So that we define the effect of inflation. For example, at present we have 2011 as the base year for wholesale price index, and in such manner what we do is we compare the prices of 2015 and we calculate the production of current times with the prices without the effect of inflation, which was back then in the base year. That was 2011, 15, 20, whatever the year has been selected. One more thing, transfer payments. What are transfer payments? These are those payments which are not included in national income. Transfer payments are those incomes which are basically part of personal income and they are taxable, but they are not included in national income. Why? Here comes the concept of income. Income is that amount which is earned, not just given. Okay? There is a difference between the amount which is given to you and the amount which you have earned. The amount which you have earned, you might have added value to any of the product in which you have earned that amount. For example, if you are in a job and you design a product, a person who has designed this product in such a way that it can be held by the pocket easily, that is the amount, that is the designing part of this pen. Now understand, the person has added value to this pen and that value addition caters to the salary of that person, and that is the value addition he did, that is his income. Now any amount which comes to you, that is the transfer payment, or anyone who is giving you grant, aid, compensation, subsidy, that comes or that is a part of personal income and that will be taxed, but remember that it is not a part of national income. It will not be included in national income. It can be asked. Depreciation. What is depreciation? Depreciation is basically wear and tear of the capital goods over the years until the amount or the final value of the good comes to zero. Okay? For example, the buildings, they do wear and tear, and the building which once costed crores of rupees is now costing just lakhs of rupees. Why? Because the walls of that building, they have now cracks, the doors, the furniture has now started deteriorating. One more thing is net factor income from abroad. What is net factor income from abroad? It is the income which the residents have earned abroad and which country's domestic territory, in the country's domestic territory, the foreigners have earned. So what we do is we subtract the two amounts and we come to the conclusion of net factor income from abroad, that how much income have we generated from abroad and transferred it to India. That's it. Now understood these concepts, we have some more concepts. One is the gross and the net. Okay. Gross and the net. How do we define gross and net? Simple, depreciation. Depreciation, if we deduce or deduct depreciation from gross, it comes to net. You will see these terms, or net domestic product or net national product, gross domestic product or net national product. You will see gross national product. The effect is depreciation. Depreciation is wear and tear. We discussed already. Next is domestic versus national. We already discussed it, that national is basically the income from domestic and the net factor income from abroad. This comes to national. What do we mean by the national income? Or the income which was generated domestically and the income which was generated from abroad. Okay? We deducted the two. NFIA we discussed already. NFIA को plus करेंगे तो क्या आएगा हमारा? National income or the amount at national level. You need to remember this, then only you will be able to understand the other factors and other concepts easily. For example, gross national product can be derived from GDP plus net factor income from abroad. similarly this also. Now per capita income, what is per capita income? The average income which every individual or every citizen of a country can have or does have a share of it, but actually it's not having it. And what we do is we just calculate, remember, net, we calculate what? Net national product at factor cost. Net national product at factor cost, we divided it by total population, and that comes to nominal per capita income. And if we deduce the effects of depreciation, the inflation, then we come to the real per capita income. Understood? These are the concepts. Now one more thing with which your all the other concepts will be cleared, that is GDP at market price and GDP at factor cost. GDP at market price is the monetary value. We already discussed what is monetary value or the market value, that is the market price. Currently also our GDP figures are based on the market price post 2015. Now our final goods and services, not the intermediary ones. Remember, within the borders of India, the borders of India do consist of those locations also in which India has established the embassies or the industries or the refineries which are located in offshore of India. That is also the border of India. Time period fixed, 1 year or 1 accounting year. In GDP, we calculate the income or the production by citizens and foreigners, both citizens and foreigners, or the foreign MNCs also. Their production is calculated in what? GDP. Remember one more thing, second hand goods are not calculated in this figure. GDP at factor cost, these are not calculated, second hand goods. GDP at factor cost, it is basically the aggregate income from all the factors of production. Factor cost is factors of production, we already discussed what are those. This excludes the indirect taxes but includes the subsidies. Therefore, what we have is GDP at factor cost would be GDP at market price minus what? Net indirect taxes. That is indirect taxes minus subsidies. GDP deflator, an important concept, always asked. GDP deflator, what it is? It basically gives us one particular number with which we tend to understand that whether GDP has increased due to inflation or it has actually increased with production. That is the concept of deflator. How deflator gives us this number? Because it compares nominal and real GDP, then only we derive a number which is a deflator, which talks about or which gives us the number with which we can define the effect of inflation in the increase of numbers of GDP. Understood? Clearly remember. Chalo next. That is the methods of GDP calculation. We have 3 methods of GDP calculation or national income accounting के 3 methods है. One is the expenditure method, income method and production method. We'll just understand these 3 methods. How? The income method, remember, we will calculate all the income. We will add up all the income, whether that is from rent, wages, interest or profit, then only we will derive the national income. And national income will be how much? It will be gross national product at factor cost minus depreciation or the net national product at factor cost, which equals to national income. Already discussed what is net, what is national and what is factor cost. हर एक चीज define कर चुके हैं हम. Next, domestic income. What is domestic income? Domestic income is basically the production at domestic level. The net domestic product at factor cost will define our domestic income, which we already discussed. Domestic income, domestic plus NFIA is national, or GDP at factor cost equals to GDP at factor cost minus depreciation will be the domestic income. Now, production method. Under this, how do we calculate national income? Very simple. We see the gross value addition of all the output. The value of the output minus the value of inputs. Then we define how much was value addition. और दिस इज ऑल्सो नोन एज वैल्यू एडेड मेथड, इसको वैल्यू एडेड मेथड भी बोलते हैं, ठीक है। नाउ अंडरस्टैंड हाउ डू वी डू दिस, वी sum up all the value addition. What is value addition? Value addition is actually what? Income. Already defined that everyone who is adding value to the product till the product reaches the final stage of production is value addition, and that generates income equals to GDP. Now understand, again we are revising it once more time, one more time. How? GDP और ग्रॉस को अगर नेट बनाना है तो क्या करेंगे? डेप्रिसिएशन माइनस करेंगे। अगर डोमेस्टिक को नेशनल बनाना है तो क्या करेंगे? वी विल सी द इफेक्ट ऑफ, वी विल डिक्रीज व्हाट? वी विल माइनस इट, सब्ट्रैक्ट इट विद नेट फैक्टर इनकम फ्रॉम अब्रॉड। अगेन if you want to change market price to factor cost, what you will decrease or what you will subtract is net indirect taxes. Three things: depreciation, net factor income from abroad and net indirect taxes. तीनों चीजों का इफेक्ट ही देता है हमें जीडीपी एट मार्केट प्राइस एंड नेट नेशनल प्रोडक्ट एट फैक्टर कॉस्ट, विच इज एक्चुअली नेशनल इनकम। रिमेंबर, ये चीज याद रखना और इस डायग्राम को याद रखना, इसको नहीं भूलना है। लास्ट में वी हैव एक्सपेंडिचर मेथड, एंड इन एक्सपेंडिचर मेथड रिमेंबर व्हाट वी डू इज वी कैलकुलेट द एक्सपेंडिचर ऑफ प्राइवेट सेक्टर, गवर्नमेंट सेक्टर, एंड वी see the effects of exports and imports, and then we check that how we can calculate the national income. So what we do in expenditure method, we see that income is actually the consumption expenditure plus savings. Now remember, you will see that how these concepts have been asked by UPSC in multiple questions, and see there is very tricky things which have been asked by UPSC. Upcoming slides are about that only, that how these terms are used by UPSC in its answers. Now remember, consumption expenditure plus savings, expenditure plus savings equals to income. ठीक है? So how do we calculate expenditure? We check private and government जितनी भी organizations है सबने कितना consume किया पूरे साल में, then gross capital formation कितना हुआ, already discussed capital formation. How capital formation? First we do savings, and then from savings what we do is investment, and that investment is capital. That capital formation is being checked, plus net exports, exports minus imports. This gives us the figure of income. Adding all of these three will give us GDP at market price. Once we get GDP at market price, what we do is we subtract the depreciation amount and we subtract the indirect taxes or net indirect taxes. This gives us the net domestic product at factor cost. We add what? Net factor income from abroad, and then we get national income. National income, again, what is national income? Net national product at factor cost. Remember this. Done? Chalo. This is just a you can say a representation of expenditure method. Last में which we discussed, the savings, investments of government and all, exports and imports, rest nothing there. Now what is the circular flow of money, or what is the circular flow of economy, or the circular flow of economic activities? We need to understand. Very simple. In our economy, this is the first concept which you can say that NCERTs discuss. In our economy everything rotates. ठीक है? हर एक चीज, the money which is generated from one place goes to another, then another, and then another. This concept was also asked by UPSC once, that the money, how much does it change hands? The frequency of money changing hands, what is it? This is your homework. ठीक है? Just check that the frequency with which currency changes hands, ठीक है? What is it called? Done? One thing. This is your homework. Just try to find out what is it called. Now understand, this frequency of changing the currency being changing hands or located from one place to another place, how does this happen? Basically, already you know that we have already discussed that state is the one which is controlling everything, which is regulating everything, And now state being a facilitator of the economy, what it does, it provides subsidies to businesses. ठीक है, सबसे पहले क्या करते हैं, सब्सिडी देते हैं बिजनेस को. कैसे सब्सिडी देते हैं, हाउ डू यू अंडरस्टैंड दिस? सिंपली वो इंडस्ट्रीज जहां जिनको हमें प्रमोट करना है ज्यादा, चाहे वो हैवी कैपिटल इंडस्ट्रीज हो या चाहे वो इंडस्ट्रीज हो वहां जहां पे एग्रीकल्चर को प्रमोट करना है, where we need to promote the welfare, where we need to promote, for example, solar energy, where we need to promote green energy, where we need to promote e-vehicles, we will give subsidy to them. These businesses will give taxes to government, and government will provide services to these businesses. And all of these transactions involves money, and the money goes in this, all of this diagram. You need to understand that businesses के साथ भी ऐसे ही होगा, resource market के साथ भी होगा. Government will spend, government will consume resources, it will build roads, it will build buildings, hospitals, schools, whatnot. Then in the product market, government will produce products through public sector undertakings, and government will utilize products also. So all of this will rotate, and the money will rotate as per the circular flow of economic activity. That was simple representation of it. Further, remember that this is the gross national product at market price. All of this GDP at market price does not include what? Net factor income from abroad. GDP at market price. If you want to derive GNP out of GDP, you need to deduce what? Net factor income from abroad. Again, net domestic product, ठीक है, NDP or NDP at factor cost, NDP at market price. The difference between the two is depreciation. And lastly, NDP at factor cost is net indirect taxes, जो हम deduce करेंगे, जो हम decrease करेंगे, subtract करेंगे. That's it. Again, one more representation so that you understand it better. पूरा आपको explain किया गया है, just to make sure that you do not miss out on one single mark in the exam. Now understand the concepts. बहुत ही easy. हम बहुत जल्दी में ये क्वेश्चन सॉल्व करेंगे because all the concepts are clear now. Now understand, increase is absolute. Increase is absolute, and per capita real GNP do not connote a high level of economic development. If question, understand the language of this. बहुत ही tricky language है. If there is an absolute increase, if there is an absolute increase in the per capita real GNP is increasing, per capita real GNP is increasing. However, it does not connote a higher level of economic development, but still development नहीं हो रहा है. क्या नहीं हो रहा है? What's not happening is development. What do you mean by this? What is actually behind this? What is the reason behind this? That development is not happening, rest all the other things are okay. Production is increasing, gross national product is increasing, fine. The people of India or the nationals of India, they are increasing, they are producing more and more, but still we are not finding development over there. Development nahi ho raha hai. So how and why is it happening? Because of the industrial product is failing to keep pace with agricultural output. What is the difference between industrial and agriculture? Because we know that both the outputs will be calculated. Nothing with this. Agricultural output fails to keep pace with industrial output. Again the same thing. Poverty and unemployment are increasing, or poverty and unemployment is on increase. That is why actual development is not happening. That is the answer of this question. If you talk about imports and exports, that also we know we will what? We will calculate it in where? Expenditure method. Simple, abhi padha tha na. Chalo, next. Very easy questions, but very tricky to understand the language. With reference to Indian economy, consider the following statements. The rate of growth of real GDP has steadily increased in the last decade. GDP at market price in rupees has steadily increased in the last decade. Real GDP has increased, gross GDP has increased. ठीक है? Real GDP or nominal GDP? Nominal GDP and real GDP. What is the difference between nominal and real? Is inflation. How do we calculate real GDP? It is based on the constant prices, and nominal is based on current prices. ठीक है? Clear? Now, these constant prices are from the base year and these nominal prices are from the current year. So therefore, these price or the numbers derived out of the real GDP will not have inflation in it. Therefore, there will be no inflationary effect in the prices. But current prices will have two things. One is the increase in production. Actual production increase होगी भी होगी. There would be increase in production because of 1 year, 1 decade time, 10 years. There will be increase in inflation. Even if we have little amount of growth rate, even if we have just 5% of growth rate, if we have had just 5% of growth rate, but along with that growth rate, there would be an inflationary rate also because we have to maintain an inflation of 4% plus minus 2%. That is why you need to understand that constant prices, there are more chances of constant prices being continuously increasing than the current prices. These current prices being continuously on increase than the constant prices, because constant prices in itself is a concept which always caters to the base year, the year which was far behind. Okay? Maybe economic activity might have been slowed down in some of the years or one of the year in this decade time. Done? Therefore, statement 1 was wrong, but statement 2 is right. Now, next, India's real GDP growth rate has decreased, or you might remember that we saw a double dip recession when we hit the time of COVID. So therefore, you need to understand there was no constant kind of a growth from 2013 till 2023. There was no such constant growth or steadily growing economy in terms of real GDP. Nothing like that happened. Next, here, just to make sure that you do not do a mistake if question similar to this appears in exam. Next question, if the interest rate is decreased in an economy, understand, if the interest rate is decreased in an economy, what will happen? You might think that this is a question related to what? RBI's monetary policy, that it is decreasing the interest rates and banks are now doing something. But the question why I have taken it here is it caters to the capital or the capital output, which you have just read in the first question, the capital output ratio. First, there will be a decrease in the consumption expenditure in the economy. It means that people or government expenditure, government consumption or private consumption will decrease. Now understand, government consumption or private consumption, will it decrease by decreasing interest rates? Decreasing interest rates means cheaper money, means that the money or the finances are now available at less interest rate. Once the interest rate is decreased, it means that the cost of funds or the cost of generating funds is less. Once this happens, it means people are getting cheaper money. Once they are getting cheaper money, what they will do is they will increase their consumption. Similar, once we decrease the interest rates, money supply in the market increases. Once the money supply increases, the demand in the market increases. Why demand increases? Because people start increasing their consumption. Therefore, the consumption expenditure will not decrease, but it will increase. The increase, or it will increase the tax collection of the government. Once the interest rates are decreased, does it necessarily lead to tax collection? Not necessarily or not directly, but yes, tax collection may increase. Why? Because economic activity will increase, which will lead to higher outputs, which will lead to higher profits, which will lead to higher income tax. But then again comes the compatibility and tax compliance, that how many people are paying the taxes actually. It may lead to increase in tax collection, but this is a sort of a segment which will come later in time. a long-term objective. After 2 to 3 years, it may happen if there is continuously decrease in interest rates. Now, one more thing, increase the investment expenditure in the economy. This will lead to increased investment expenditure. Now, do not confuse yourself by the term investment expenditure. Again, if you confuse yourself and you understand that it is the expenditure on investment, then you may lead to thinking this thing that it is actually the expenditure on what? On the cost of funds or cost of generating funds. But it's not that, it's actually the investment expenditure which we have dealt with in the expenditure method of GDP calculation. This investment expenditure will increase. Why? Because people are getting cheaper money. They will invest this money in investment. Once they invest the money, the investment expenditure will increase. Answer was C. Understood? Next question. With reference to the sectors of Indian economy, consider the following statements. Sectors of Indian economy. Why have I taken this? Because this question is somehow related to the national economy only. How? Understand. Storage of agricultural produce. Is it a secondary sector? Understand. Just to make sure that you remember the terms. बहुत ही basic concept है. In the first chapter only NCERT discusses the sectors of economy. Sectors of economy, very basic. Primary sector means extraction and production of raw material. Secondary sector is manufacturing or industry, or you can say the natural products. Natural products का जितना भी processing होगा, that is secondary sector. Natural products का processing is secondary sector. Tertiary sector is services to primary sector. Now understand the question again once more. 2024 का question है 2024 storage, that is service to what? To agricultural produce. This is the service given to what? Primary product. This is not secondary sector. This is tertiary sector. Or for that matter, it is secondary sector. Or for that matter, it is the tertiary sector, not the primary sector. Okay? Not the secondary sector. Therefore, pair 1 was incorrect. Rest of the pairs are correctly matched because dairy farm does produce natural products. Mineral exploration is dealing with the tertiary sector because it provides services. Mineral exploration is basically the service or GIS services or geological services, the studies which we do in mineral exploration. Weaving the cloth is we are manufacturing the primary product or we are processing the primary product. Therefore, 3 of the pairs are correct. Next, we have with reference to physical capital. Understand once more, UPSC asked a question from capital in Indian economy. Consider the following pairs. Similar type of question was asked in 2023 also. This is 2023 paper only, 2023 question or 2024, I don't remember it. I guess 24 question it is. 2024 का question है. ठीक है. Now understand. With reference to physical capital in Indian economy, consider the following statements. Farmer's plow is a working capital, fixed working capital. Now understand. What is the difference between working capital and fixed capital? This is basically an asset. Okay? An asset, such an asset which leads to long-term output. It is purchased once, but its output will be there till the time of this asset, till the depreciation. Remember, till the depreciation of this asset leads to a situation where the value of this asset is decreased to 0. That is fixed asset. It is like this building is a fixed asset, this computer is a fixed asset, a car is a fixed asset, something like furniture is a fixed asset. But remember, this farmer's plow is a fixed asset. But what is working capital? This is that amount or that money or that per se any of, for example, this pen, stationery, those expenses or those, you can say investments, or you can say those commodities which are utilized by the business in itself just to maintain the working of the business. That is why it's called as working capital. Working capital, simple, its tenure is limited to just one accounting year or short-term tenure. That is why it's called as working capital. It is usually for 1 year. Understood? Therefore, first was wrong. Yarn is not a fixed capital. Computer is a fixed capital. Petrol is a working capital because you put it in your car and you just utilize it and then it's over. Investments. Again, in the following assets, which of the following? Investment in these assets is actually an intangible investment. Inventory is tangible, or you can say these are what? Raw material, these are those goods which we use. These are intermediary goods, or inventory is just stock which a business maintains or which a business keeps so that it maintains the flow of its products in the market. That is inventory. So inventory is not basically the intangible asset, it is an tangible asset of a company. Therefore, 3 of them are correct. Okay? Last we have this question, and this question talks about with reference to the expenditure made by an organization, or a company, which of the following is correct? Very simple question. If you acquire new technology, it is known as capital expenditure. That is, acquiring new technology is capital expenditure 1. Debt financing is considered capital expenditure. Now, understand, if a company or a country raises debt from the market, if a country or a company is raising debt from the market, this debt can be used for either what? Capital formation, or there is the nature of the debt. Agar loan liya hai, this loan can be used to be invested in capital expenditure to create more avenues of production, or this debt can be used to repay the earlier debts, or used for daily expenditure, or used for daily revenue expenditure, or you can say daily expenditure, or the receipts of revenue receipts. That is debt financing. One thing, debt financing is raising loans from the market. The nature of the debt will define that whether it is capital expenditure or whether it is the what? Revenue expenditure. One thing. While the equity financing is revenue expenditure. Now understand, equity financing is never a revenue expenditure. Why? Because equity financing means that you are financing the shares, you are financing the equity, you are financing the share of a company, you are purchasing the share of a company. This is not revenue expenditure but an expenditure in the capital. Okay? So statement 2 is wrong, statement 1 is correct. Answer is A. With this, we conclude today's discussion. I hope this was very much helpful for you, and you will continue this series, you will show your love, and then we will be together qualifying UPSC 2025 prelims. And if you have any other doubts in your preparation, you want your preparation to be fast-tracked, you are facing issues in time management or any other thing, whether that is studies, whether that is newspaper, current affairs, or any other thing around your preparation for 2025, SRIRAM's IAS welcomes you with all of your doubts and